Hello, how are you? Hopefully you having a wonderful weekend. And today, as you can see, a little bit different. Rather than going on the stocks, I'm trying to uh, do this video on the ETFs. And ETF is also one of the very good way to invest. And especially on there is also a diverse categories of ETFs. But today I'm trying to cover who doesn't want to uh, invest in the individual stocks but trying to capture the broad market index, especially in the index funds. And there are tons of index funds in the market, and I have picked the three basically which I have liked and based on certain criteria. So I will cover on that one which historically did very well as well, and some might you already see in a lot of the news channel there. So, and I also highlight why I have picked that as well. So okay, so if you are new to my channel, myself Pramod Kumar, I am a CFA charter holder and FRM certified, and usually on my channel I cover the stock fundamental review on the stock analysis. I go very deep into their 10K and financials and using the economy, mostly on the long-term investment perspective. So onto the same, keep in mind, I'll try to do this new series of videos. So this videos is on ETF first. This is the very first video on that. I will do index funds, and then the next immediately I'm planning to do on the dividend side as well, which and next depend upon what you put in the comments, I'll try to do the video on that. So let's get started without further delay. Okay, so I'm hiding myself so you can see the full screen. So the first very famous S&P. So basically the criteria for me to pick up the large cap and basically those index which tracks the S&P 500. So S&P 500 means the 500 stocks a little over in that index, right? And so basically it's a very diverse portfolio. You will get the exposure, and you basically, if the index goes up, these ETFs tracks the index, you go up and go down. So that's what it is. So as you can see, the first in my list is SPY. This is one of the first ETF launched in the United States. It's launched in 1993, right? So so you can go SPY and look into that. So this is as it's tracked the S&P 500, and this one, if I see from the expense ratio, if you invest, it's 0.0945, right? So the expense is 0.0945. So what does it mean? So this mean in dollar terms, if you invest $10,000 into this, you will get $9.45 as an expense, right? And assuming yeah, so that is it. So if you see from the return perspective, on the average this year it's minus 6.97 return, but historically over 10 years it's give 10.39 return, which is pretty very good, right? So if you want just have some exposure to the equity side and doesn't want to take much risk, so I think this is another way to get some good exposure. So as also mentioned here, the exact date is the 22nd of January 1993. So since then the this fund is launched. Again, the past performance doesn't guarantee, but historically we have seen the S&P 500 give average around 10% return, and the funds tracks it very well. So that's what it's mentioned in their prospectus. So if I'll show you more. So as you can see, this is a broad-based index ETF, and the weights onto the IT is 25%, almost 25.48 or almost 26%. The healthcare is sector, the exposure you will get almost 16%. Financial is almost 11%. The communication service is 10.74%. Consumer discretionaries is almost 10%, and also real estate, energy, material, and so on, right? So this is very diverse. So rather than have one exposure or one stock, and some top 10 holdings is also mentioned here. For example, Microsoft, which is almost 6%. So basically, if you invest $100 into this ETF, and you can have your $5.62 going to Microsoft. So think from that perspective, right? Easy to have. Apple. So Microsoft, I also did a very deep stock analysis. It's a very good stock. You can check if you want to see that video. Apple is another one I have did it. It's 4.96% weight. It's also on my channel. Facebook, I also liked it. It's very low here in 2%, almost 2%. That's on my channel. Currently, the Facebook is investors are taking advertisement out of that. It's not, seems like it's not doing in short term very well. And Google, this is the parent company of Google, GNG, JP Morgan, and Visa, so on. So basically, what it's trying to say is these are its top 10 holdings. So this means all other 500 is even less than 1.29%. So this is very, very diverse in terms of the ETFs, and the issuer of this ETF is the company Street. Okay, so that's the first one. So that's first one doesn't mean that it ranks number one. First one means it's just as a list. So that's point to be noted. Okay, the second one basically is IVV, right? So IVV is issued by the BlackRock, and by BlackRock iShares, right? So again, this is a low cost, tax efficient. So basically there are many other as well, but when I picked these ones, I picked which has the low cost, right? So the expense ratio here you can see is only $9 in this one, or 45 cents. In here it's even further lower, right? It's only 0.04%, right? So this means this is only $4 for every $10,000 investment. And similarly, they have invested in the same stocks to get the similar exposure. So the fund and the benchmark, you see, it's pretty much, if you invested in 2000 May in this stock as a $10,000, your money should be right now is 33, but the market crash is little over 20. So it's not bad, actually it's very good. And the return is 10.47%, right? As compared to the benchmark, maybe because of the little bit of the fees and the cash. So that's why it's a little bit lower, but few basis point, not much. So overall, if you can see, this is the another one is a good, so this is launched in so this is a fact sheet basically, sorry, this is provided in March of 31st. So this data as of March, so this is pretty latest, right? So the ticker is IVV. So this is the second one in that category. So right, so that's it. Again, the same here, this you see again reflecting 0.04%, and the sector's allocation is mentioned here, right? Again, pretty similar, right? 25.37, healthcare is 15.32. If I compare that with this, in this one they have a little bit more, 25.48. There is 25.37, so pretty much similar, right? 15.32, 15.39, but pretty much give the same similar kind of exposure to S&P 500, right? So this give, okay, so used to go to seeing a long-term growth, right? So this is from the long-term perspective. So this is another good way to invest and get the exposure. The third one, which is on my list, basically is the Vanguard S&P 500 ETF. The ticker number is VOO. VOO. So VOO is, if you can see from the expense ratio, is only 0.03%. So if this is fully passively managed, and it's trying to, this is a strategy, full replicated strategy. They're trying to replicate S&P 500, again is a large cap and is passively managed. So since this is a passively managed, so that's why this is the expense ratio is lower, right? And you can see the return on this one is 11.69 since inception. So they should have a date here. Maybe it's not a date here, but anyway, right. So pretty much, if I can see there, okay, yeah. So they have, this has number of stock is 508, 118.7 billion in terms of the market, right? So as if you can see here, the good thing is here the expense ratio is very, very low. That's what I like about it. If I want to rank all three now based on which one, if I go and pick it up, I'll just based on the expense ratio, so I'll pick up this one, Woo, right? Because it has very low expense ratio, is 0.03%, and pretty much all these three captures and track passively, I believe it's right, the S&P 500, and these are the low cost, and few dollars here and there is not much difference, right? So that's my three ETFs to track the index 500. If you like this video, please kindly do subscribe and like this video, so more and more, once you like it, you give a thumbs up, more and more people will view it. And one more thing, yeah, kindly do not forget to subscribe to the channel if you are new, and also please put a comment there. If your comments will give me some direction, which one you want to see, which one you like, so I really appreciate on that one. So also let me know which one is your favorite ETFs, if you are investing ETF, if you're not investing in ETFs, what do you think about that, right? On to this next series, let me give you the hints up. The next one I will like to do the dividends. Again, my focus is just like this on the dividend. I will do the low cost dividend, right? So let's see, and see you soon on the next video. Bye for now.